Hey, what's going on, everyone? Welcome back to the channel. Today we're talking Red Violet, ticker symbol RDVT. As a disclaimer, this is not investment advice. This is just a research video I put together meant to be educational as well as entertaining. I'm going to highlight some recent news regarding this company, showcase what makes this vehicle operate, and then we're going to take a look at the stock. Thank you for joining us. If you're new to the channel, please like, share, and subscribe. It really helps out the channel. At the time of this recording, it is Monday, August 17th. The market has not opened yet, so this is a good time to make this video. A little company profile about Red Violet. It's a software and services company. They specialize in data fusion and analytics, providing cloud-based mission-critical information solutions to enterprises in the United States. I want you to pay attention to the bottom of the company profile. It lists Forewarn. That's a part of this vehicle that we are going to take a deeper look at. Right now I'm going to put you into the Red Violet website. It highlights its chairman and chief executive officer, Derek Dubner. He served as the chief executive officer and a director of Red Violet since its formation in August 2017 and continuing through its March 2018 spinoff. Spinoff indicating that it was once Cogent.
Advancements in technology happen at a rapid pace. That means industries also need to adjust at a rapid pace as well. Cogent is a U.S.-based company that is listed on the NASDAQ under ticker symbol COGT. Joining me now is company CEO and director, Derek Dubner. Derek, thank you so much for joining me.
My pleasure.
Well, tell me about the business model of Cogent at a time like now where a lot of companies need to protect their data and consumers are worried about data breaches. What do you do?
Sure. Well, we are a data and analytics company by heart. This management team has built two successful companies in what we call the data fusion space. That is a subset of big data that we hear a lot about. In data fusion, we aggregate billions and billions of records, and we fuse that data together to present a comprehensive view of individuals, their assets, their businesses, and the interrelationships. And we serve that to the risk management industry. So to better serve consumers, banking and financial services, insurance companies, law enforcement and government, those type of industries can utilize this for real-time solutions. We sold those two previous ventures to two of the leading companies in the world, and so this management team got back together, and 2 years ago we started Cogent to re-enter our marketplace.
So this article is taken from Reuters 2 years ago. Brief: Cogent announces spinoff and shift in management team. Cogent Incorporated announced completion of spinoff of Red Violet, its risk management businesses. Now let's take a look at Forewarn. Forewarn is a division of Red Violet, which is the publicly traded data and analytics company. So let's understand a little bit about Forewarn, for real estate. So this is a type of technology that, while using only the incoming phone number, Forewarn can positively identify over 80% of prospective buyers, identify if your prospect has a criminal history, verify current property and vehicle ownership, verify financial risks. So it's meant to be a safety blanket for a realtor or an agent in real estate. So if you have this piece of company, then you're also in the real estate sector, as I understand it. So this type of technology, Forewarn, is allowing people that are just receiving phone calls based upon the number that they're receiving to identify any sort of criminal history, some financial indications that would possibly maybe even save people time, maybe save a realtor some time regarding meeting up with this person. So some criminal records we see here associated with the buyer, some phone verification, some address history, some financial risk indicators and assets. So maybe if the person who's trying to buy the house can't buy the house, maybe it would just, again, like I said, save some time to all parties involved. So I see this as a benefit. I can totally understand where this type of technology is being used and it's wanted. I'm going to put us into an article from Bloomberg Business. Forewarn partners with Stark County Association of Realtors, also known as SCAR. Ohio-based association contracts to make Forewarn services available for its 1,000 plus realtor members to promote proactive agent safety. So SCAR contracts Forewarn to serve the city of Canton and throughout the surrounding Stark County area of northeastern Ohio in an effort to promote proactive real estate agent safety. It's available both online and through a mobile application. Let's take a look at ETF.com and see where Red Violet is held. There's 13 ETFs that hold Red Violet. It's got about close to 300,000 shares spread across all these ETFs. Its biggest holder is IWM. Its largest allocation is in IWC. The largest allocation is in the iShares Micro Cap ETF IWC with a portfolio weight of 0.04%. On average, U.S. ETFs allocate 0.01% of this stock in the ETF. Take a look at some different ETFs with their percent allocation, as well as the top performing ETFs, ProShares, Ultra Pro, Russell 2000. That's a pretty popular ETF. Other ETFs and their number of shares. VTI is coming in second with just over 65,000 shares in the ETF. It's mostly a vanilla ETF. And then we'll finish off with all of the ETFs that hold them according to their market value. And we're going to take a look in comparison with another stock, TRU, ticker symbol TRU, and this company is a competitor. It's in the same space. It's dealing with data analytics, big data. So we are looking at these different time frames, and we just see that Red Violet is outperforming. And there's a little bit of crossover with the performance, but just to show a comparison with another company that's doing similar things, and we notice that it's hard for me not to notice a price difference in the price action associated with these two. Red Violet reports quarter two results. It had a quarter two GAAP EPS of minus 22 cents and revenue of about 7 million, minus 2.6 year over year. Gonna take you into the 1 month trading window of my trading view. I'm going to highlight some levels of support, starting off with the 14s, then the 15s. It makes a run, and then it pulls back to its earnings report. That's what that red circled E is indicating. After its pullback, it runs a little bit more up into the 19s, the low 19s, establishes some support to then it's where it's currently sitting in the high 19s. However, I'm going to highlight its last level of support at one point was a level of resistance. And again, as I was taught in technical analysis, again, I'm very limited in my technical skills. However, I was taught that this shows some health in the stock, so as to indicate some stair-stepping patterns of ascension. It runs, it hits the resistance, comes down, meets its new level of support, establishes a new level of support, but I think I'm not going to indicate a new level of resistance. If it can stay above this current level of support, then I can revisit the next level of resistance. I'm going to drop us into the Motley Fool's Industry Focus podcast to shed some more light about Red Violet.
I've got one, and then we'll do a little debrief. What's your first business?
Okay, and obviously we're going to throw out that there's a lot of caveats. These are not official picks, but hey, these are companies that I think can 10x in value. So the first one I'll throw out there is a spicy little software company called Red Violet, ticker symbol RDVT. This is a company with about a $200 or so million market cap. It was spun off into the public markets in 2018, and it's already up over 200% since then. Dylan, have you ever heard of Red Violet before?
No, I haven't.
Okay, perfect. That's how
This
I like
is great.
it.
I'm gonna play the audience for this episode because I love it when you bring a name to me and I'm like, all right, tell me all about it.
Okay, so Red Violet is a software company that is focused on big data analytics. So they go out and they purchase huge pools of data from a wide variety of sources, mostly from public sources. They say they have 9 petabytes of raw data. That's a lot. And they develop this custom software engine that allows their customers to take that massive data set and provide intelligence and make sense of it. Now, Red Violet has 2 main products that they've rolled out, and they have said that they have more in development, more on the way. I like that. That tells me optionality is already embedded in this company. The first one is called IDI, and it is mainly aimed at the risk management and fraud detection agency. So they take, again, this massive amount of data, and they sell the information, and they sell the service to companies like insurance companies, private investigators, bail bondsmen, collections agencies, debt buyers. Those customers want information on their customers, and IDI helps them to track down customers, get contact information for them, and to recover debts and prevent fraud. So it's not exactly like a business that you are screaming in love with if you're a Big Brother fan, but that's the business. And they have attracted more than 5,000 customers so far, and we're going to get into the financials in a little bit, but as you can imagine, it's a software company, so the margins are pretty good, Dylan.
Yeah, I think that's a staple at this point of the tech show is software company, high margins. Let's go. And I think just to quickly emphasize that the trend that this is really hitting on is analytics and big data. Like that's the tailwind for this business. That's
correct. And that's a massive market that is only going to grow in importance over time. So that's their IDI business. Their second one is called Forewarn, and this again leverages their massive pool of information, and this product Forewarn is specifically designed for the real estate industry. And the way they sell it is, imagine that you are a realtor. You have a house on the market. You get a phone call from a prospect and says, "Hi, I'm interested in this property. Will you come show it to me?" You are the realtor, you have no idea who's on the other end of the phone. You know nothing about them. All you have is a phone number. This product, Forewarn, allows you to take that phone number and get criminal background history on that person to see if they have any bankruptcies. And basically, it lets you know more about the customer, the potential customer, that you are about to go to a private location and meet with them with nobody else around. So they have signed up over 40,000 real estate agents in just the last 2 years since this product launched, because again, it provides realtors with a way to manage their risk and prevent some bad things from happening when you're meeting with people that you've never met before face to face.
It's funny. You mentioned the fear of Big Brother, and it might not be an appealing company for folks that are maybe in that world. I'm reading 1984 right now, Brian, and it is definitely sounding that alarm a little bit for me. What do the books look like for this business?
Yeah, and again, just as you said, Dylan, I understand why this company's core business is going to turn off a lot of people, and that is completely fair if you want to take a pass. But the financials on this business are definitely rapidly improving. So in 2007, the company did $9 million in total sales. Again, not much, small company. In 2019, that number jumped to $30 million in sales. So that's more than a quadrupling in 2 years. What really attracted me to this business was the margin profile, Dylan. So again, they spend a huge amount of money to get these petabytes of information, and then they sell it. And because their costs are largely fixed, the margins are just exploding at this company because every additional sale they make is basically 100% gross margin. So their gross margin was 18% in 2017, and that jumped to 59% in 2019. Management thinks that with scale and time, they can get this above 80% within the next couple of years. So that is causing gross profit to really expand. If you look at the first half of 2020, revenue has grown, but kind of a hard environment to sell any products. So in the last quarter, their revenue did drop 3% when compared to the previous period. Management did say that they are seeing rapidly improving growth since bottoming out in April. But again, even though this company has very little sales, they were free cash flow positive over the last 6 months. So on a net income basis, they're still showing losses, but they are producing free cash flow of 1.8 million just last quarter. And the balance sheet here is squeaky clean, 14 million in cash, 0 debt. And the company believes that its total addressable market opportunity today exceeds $10 billion. How much of that will it capture? I don't know, but there's probably a lot of room between 30 million and 10 billion for this company to grow.
Yeah. I mean, that's the beauty of being in this smaller space, these smaller market caps is, you don't need a $400 billion market opportunity. You can be a lot smaller and you can still wind up putting up some pretty incredible returns. Brian, when you look at this company, obviously not everything can be great. What are some of the risks that you see? We're looking at a smaller business, so I think just off the bat, we're looking at a different set of considerations here. But what else comes to mind?
Yeah, so this was a spinoff that has some concerns. They're going, and again, the market that they're in they have faced some pretty big competition. We're talking about Palantir, which is that multi-billion-dollar company that is about to come public. LexisNexis, they're competing against TransUnion and Thomson Reuters. So it's not like they have this market all to themselves. I think that the market is big enough that there can be multiple winners, and they've seemed to have developed some niches for themselves that they can kind of own and really dominate in specific use cases. But you can't ignore the competition here. Two other risks that I saw was concentration risks. So they get 40% of their data that, again, they resell from one source. So if they ever had a bad relationship with that one data provider, that could really hinder their selling proposition to customers. And then on the customer side, one customer accounted for 15% of revenue. That's actually not that bad, given how small this company is, that they only had one customer that was that represented some concentration risk. But those are definitely two risks to keep in mind. One other that I'll throw out there is that two of the major shareholders of this company, Phil Frost and Michael Browser, they don't exactly have perfect reputations with Wall Street. They've been accused in the past of dealing with pump and dump schemes, and those two shareholders have 22% and 17% of this company. So that is something to keep in mind here.
Please be sure to subscribe to the Industry Focus. I love the Motley Fool guys and gals. I really do listen to that podcast religiously. It's one of many podcasts that I subscribe to. So I'm going to leave it here. Please be sure to like, share, and subscribe. Thank you again for your time. If there's another company that you'd like to see me research, please let me know in the comments below. Y'all take care. Y'all have a good week, and I will see y'all on the next one.